Obviously, I know you priced at the high end of the range. I'm sure you thought a lot about the price, but what is your reaction to breaking the IPO price when so many of these other companies have soared out of the gate?
Yeah, first and foremost, Emily, thanks for having me on this very exciting day for myself and obviously the team as well. Look, no real reaction. I think, honestly, if I just watch the stock price all day, I'll probably drive myself crazy. And in all seriousness, we expect a certain degree of market volatility within the first few days, if not weeks of trading. But we're very much focused on the longer term and really utilizing the proceeds from this capital raised to achieve and unlock the vision that we've been pursuing all along, which is to really enable e-commerce for what we feel is a much more value-oriented and underserved market by sort of the traditional e-commerce players. And provide a much more discovery-oriented, fun type of engagement, something more along the lines of TikTok for shopping on your smartphone. And I think if we just focus on that in the long run, the markets will reward us.
Well, welcome to being a public company. Unfortunately, investors are going to be focusing on your stock price. And to be fair, you're a $15 billion company as of this IPO. That said, I'm curious, how did you think about price in the final hours, given what we saw with DoorDash and Airbnb, and wanting to strike that right balance of, you know, a nice pop, but not too much, and not leaving billions of dollars on the table?
Yeah, honestly, Emily, this is not something that I've done before. And it was not really the core focus for me. For me, it was getting the right investors to come on board long term and see us through this journey, which is going to last decades.
So plenty of investors have said similar things. An IPO is not about a day. It is a long journey, and it's a journey of years. So let's talk about what's ahead for you. Wish is an online discovery platform where you connect third-party retailers with customers at low price points. What is your sort of product roadmap ahead?
Sure. I mean, I think it's to continue doing what we're doing. So you mentioned value-conscious consumers. I think we continue to double down on that. Our core consumer demographic, if you look at our buyers, 75% of them earn less than $75,000 per year from a household income perspective. And that's 60 million households in the US, but that's 300 million households in places like Europe, where we have actually a larger consumer base and a larger portion of revenue coming from than the United States, where we started and where we're headquartered. And really to continue to innovate on the product, to really make the shopping experience not just about fulfilling intent and responding to searches and doing fulfillment really well, even though probably in a slightly more expensive way, but really innovating, whether it's video, all kinds of fun features, and make the shopping experience fun again on smartphones for, again, hundreds of millions of households to really sort of complete the comprehensiveness of our catalog and become in the end game, the default shopping destinations for hundreds of millions of value-oriented households around the world.
Now, quality control remains a big issue. There are some customers out there who've complained that, what they get doesn't look quite as good as it does in the picture, or maybe it's a counterfeit good. Some people have even received empty boxes. What else can you do to get this under control?
This is one of our other core focuses, along with logistics. So first and foremost, we have a huge amount of growing consumer feedback coming to us across many different languages, many different locales. Just in the first 9 months of this year, our customers have provided us with over 85 million reviews and ratings of products, over 72 million ratings and reviews of our vendors, uploaded nearly 2 million videos. And that's a great way to get feedback from the consumers in terms of not only sort of what doesn't meet the customer's expectations and figure out a way to make sure that doesn't happen again, but also amplify the products that are really working well within sort of a certain audience of our consumers. And on top of that, in terms of all the work that we've done on logistics, which is primarily the reason why we feel our business is much more robust than ever, is we've taken control over 90% of the shipments. If you sort of rewind back to the beginning of 2016, we controlled 0% of our shipments. We never actually had access to the physical packages. As of October this year, we control over 90% of the shipments, and that allows us to do a lot more in terms of quality control, but also providing a much more reliable, faster fulfillment experience as well.
What about from a customer service perspective, when you're working with third-party retailers, you only have so much control over them. I mean, there are some folks who buy things, say they can't get an answer from sellers, especially if there's a problem. How can you take more control of that relationship?
Yeah, I mean, so we are a part of that relationship, whether it's our customer support staff or increasingly so, it's our power users. It's our sort of Wish Star community, Wish expert community. That's not only just providing sort of objective feedback on the quality of products within their area of expertise, but in addition to that, providing how-to guides, answering questions, and really making that connection. Look, a lot of our suppliers are in the manufacturing hub of the world, the factory of the world, China, and a lot of them don't speak the language. Even if they have the ability to communicate in English, you know, we have transactions in over 100 countries on any given day. And this is where sort of empowering our community to help with those types of issues comes in really, really handy. And that's something that we've been scaling and will continue to scale for a long time.
Now, you said you turned down an offer from Amazon to buy the company a few years ago. Now Amazon is one of your, if not the most formidable competitor. What is your plan to take on Amazon over the long term, especially given, that e-commerce is here to stay and growing?
Yeah, I mean, the way that I kind of see it, we don't think we're really competing with Amazon head on. And there are a couple of reasons for that. First and foremost, is sort of human to computer interaction. I love Amazon. It saves me time, especially, during a week where you're doing a roadshow or you're taking your first company public. I would love to pay to save more time, and Amazon allows me to do that, and I can afford it. Our consumers are looking for a different kind of trade-off. They're willing to give up a little bit of time in terms of delivery time, making that longer, or walking to one of our brick and partner stores in order to pick up the products, in order to save a little bit of money, whether it's 2, 3, 4, 5 euros or dollars, et cetera. And then from a sort of engagement type of perspective, our platform, again, it's over 90% of the engagement and the transactions and the orders come through mobile devices. Those tend to be Android more than iOS. But it's a very different type of experience. It is a browse-oriented, discovery-oriented experience where even out of the daily active users that come in and end up actually buying something, over 70% of them never actually initiate a search query on that day. They're browsing, we're kind of predicting what type of products they will like, and ultimately getting them to buy them. So it's not an intent-based experience. We generate inspiration, awareness, and demand for a lot of these products.